In 2011, Bitcoin fell below $20. In 2015, it fell below 200. In 2017, below 2,000. In 2022, it fell below $20,000. Now, in 2026, we're going to have the same thing, but it's going to fall below $200,000. Do you kind of see the trend here where Bitcoin continues to rise despite all the odds put in front of it? In a time full of recession, negativity, and market downturn, I think this is definitely one thing to keep in mind in terms of the long term of cryptocurrency and mainly Bitcoin, that over time, Bitcoin just continues to win. Well, welcome back to the channel. Today we have some very important things to talk about. First off, the on-chain data in terms of Bitcoin. We have some really interesting charts I want to look at with you. How Bitcoin could favor in a recession. And I know how crazy that sounds, but you have to remember, Bitcoin was born out of a recession, the great 2008-2009 recession, and what it could mean for its price in its future. Then we have to cover a little bit on the AVAX Scandal, where they hired the lawyers to basically, kill their competitors, how that's going to affect them in terms of price in the future, and just altcoins in general, and in terms of things like this happening. And then I want to give you guys one big warning about the Ethereum merge, something that I think is really important, especially for people who are just getting into the space or are very excited about the merge happening. All right, welcome back everyone. It's good to be back. It's been a while since we've done this, so bear with me in these first couple of videos as we kind of try to gain traction again, get back into the charts, get back into everything that we're talking about. But as of right now, first thing we're jumping into is two really important charts that I want to go into on Bitcoin's on-chain data. Now, the first thing is called the supply adjusted coin years destroyed. Basically, to make this very simple, this is allowing you to look at when long-term holders are hodling and when long-term holders are selling. Now, it's really easy to kind of look at. The main thing that we really want to look at are these red circles. Now, one thing that you can pick up on is that when we're below this blue line right here, that's typically when we have a low CDD, basically meaning long-term hodlers are hodling, right? They're holding on because prices are typically low. Now, long-term investors are considered our smart investors because they're in it for the long haul. Those are usually the people who make the most amount of money, not just in crypto, but investing in general. Now, you can see that over time, whenever prices are low, that's also when these long-term investors are hodling. And as you can see over time, I mean, these are usually when the lows of we're in the late stages of a bear market, transitioning into an early bull market. Now, what you could see is recently we just dipped below this line all the way over in this corner. Now, this doesn't necessarily mean that the bear market is over, especially considering we're still kind of in this weird recession where people are trying to say that we're not technically, but we kind of basically are. But the big thing is we don't know how long this is going to last. And that's one of the most important things, is how is Bitcoin going to favor in this recession? Obviously, it's not really going to go up in price, but can we reach a bottom and kind of stagnate and just chill there for a while, like we did back here in around 2018, 2019, where we were basically at these lows fluctuating for about a year. And another chart to really hammer home this point is the profit and loss by return. Now, again, this is a very similar thing, but usually when a lot of people have lost money, or when most people lost money, it's a lot of the speculators, short-term holders. Sometimes medium and long-term holders may sell out because they're getting scared of, what could happen, what may happen. But usually when around 80 or maybe 80 to 85% of hodlers or people in the market lose money, this is when we really reach the late term stages of our bear market, which you could see over here back around 2015, again 2018, 2019, and again right around here. So are we at the end of the bear market? Can we drop any lower? Yes, I mean, we don't know how long this is going to last, but this is a good indication that, well, one, most people have already lost money, and that really happened right here with that last dip earlier, a couple months ago. Now, when we go on the charts, I think we could drop a little bit lower. A lot of it is tied to the Ethereum merge, which I'll give you guys the warning in a little bit later. But let's actually hop on the charts and I'll show you guys what I'm seeing. So not to make this video too boring, I don't want to just go over charts and stuff like that, even though I know you guys really like that stuff. I also do want to get into some of the important things as well in terms of news and kind of the perspective I'm seeing. But this is the Bitcoin chart on the weekly. And the thing that I'm seeing here is currently we have a floor set at around 20,000, right? Because that's one, a psychological level. People are very attracted to numbers, whole numbers, 20,000, 10,000, 5,000, things like that. So 20,000 is a really important floor also because when you consider it and look at it, this has also been a floor or a ceiling back in that 2017, 2018 bull run. So again, people are saying this is the first time we've dropped below the last all-time high. This has never happened, things like that. Now, do we have the possibility to fall even lower? Well, I have this floor marked up at around $13,000 to around $11,000. Do I think we can drop here? I think there's actually a strong possibility to it. Now the reason is because if we go to the DXY, now the DXY is very important in terms of Bitcoin. Now the reason for that is when we come here on the monthly, a lot of people say that Bitcoin is an amazing inflation hedge, and honestly, the way it's performed, it's actually not. When you look at gold, it performs well as an inflation hedge, and it has been because of, the economic downturn. When we look at Bitcoin, Bitcoin has followed stocks and indices way more than it has been an inflation hedge. So is it safe to say that maybe Bitcoin isn't the greatest inflation hedge as of right now? I think yes. But I think we also have to remember that just because Bitcoin is following stocks and indices doesn't mean it can't do well in this recession or, what we believe to be in the future. So as of right now, in terms of what's happening right now, Bitcoin does bad when the dollar does good. And the dollar does good when the economy and the Federal Reserve are more hawkish, which they currently are. And Jerome Powell spoke this weekend and was saying that they're going to be more hawkish. They're going to raise interest rates, which actually strengthens the dollar because it makes the dollar more expensive and therefore makes it more valuable. So as the dollar continues to rise, which it just broke above these highs, from 2020 and 2016, it broke above these highs. Now the next probable ceiling is around here back in the early 2000s, which again brings me to the .com era. What I personally see, usually what happens in the charts, and there's a lot of other factors, but the charts give us a visual representation of it, is that when we're looking at this, the next possible ceiling for us to go to could be up here at that .com era. And if Jerome Powell himself is saying that the Federal Reserve is going to be more hawkish, he's going to raise interest rates, that also raises the dollar value, which could push us up. So with the dollar getting more strength, with the Federal Reserve being more hawkish, that also means that if we're looking at Bitcoin, there's a possibility that we continue to drop and possibly make even lower lows. When we go into the Ethereum chart, which we will in a little bit because I don't want to get too off track, you'll see how this could also play into it. Now, one thing I also want to talk about is that Cointelegraph releases where UBS raises US recession odds to 60%, which I think we're already in the recession, but a lot of people are trying to tiptoe around it. They're walking on eggshells. But honestly, we're in the recession. We just haven't seen the worst of it yet. And they're saying, what could this mean for crypto prices? Well, one difference between cryptocurrency, mainly Bitcoin, and stocks is that failing companies are not a suitable store of value during a recession because they lose value, and companies can go out of business, meaning bankrupt assets can be liquidated and the shareholders get zero. If you're investing in Walmart or Verizon or Tesla and that company goes to zero because of a recession, you're not going to get any money as a shareholder, as a stakeholder. But in cryptocurrency, what we're talking about is the decentralization aspect of cryptocurrencies is what makes it different. Bitcoin at this point probably won't really go bankrupt, right? It can be delisted from major exchanges and everything, but it'll live on because the blockchain is completely different. It's not a company, it's not centralized, and it's global. At this point, I don't think it's very comparable to what, Tesla could go through in terms of going bankrupt, losing its financials, blah, 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 blah. So that's what separates Bitcoin in this. And you got to remember, Bitcoin was born out of a recession in 2008, 2009, which was one of the worst recessions that we've had ever. So you have to ask yourself, is Bitcoin going to thrive in this? Probably not. But is it going to at least hold its ground? I think so. And when we're talking about the .com bubble, right? When we were looking at the charts and we're looking at how strong all of the dollar was. If we go back to the dot-com bubble, we have to kind of imagine, what if cryptocurrency right now is the same exact thing as the early 2000 dot-com bubble? When you look at some of the companies that were founded, Amazon, eBay, you've got Priceline.com, Shutterfly, things like that. These are only 4 to 5 companies that really went big over the past 20 years. Look at the cryptocurrency market now and ask yourself, are there really long-term projects that are being made right now? I mean, sure, right now they seem like hype, like Solana, Cardano, Avalanche, Terra, Luna 2.0 or whatever. But a lot of these are basically the same as the early dot-com bubble. You've got Bitcoin and Ethereum, who could be the Amazon and the eBays. But when you think about it, in 1999 alone, there were over 450 IPOs, which is basically new companies going public. And then when you really look at it, over 85 to 95% of these companies went bankrupt. They went out of business, and you've never heard of them. Well, that's probably going to be the cryptocurrencies right now. A lot of these cryptocurrencies are just kind of right place, right time thing. And now the recession is weeding them out. I think we really need to get rid of a lot of these, useless projects, or they say they have real world application, but really they have no span of control or productivity or anything outside the crypto realm. In terms of Bitcoin and Ethereum, we've seen them actually change the world in a lot of different ways. But a lot of these other cryptocurrency projects, they don't really do much for the people. They don't change daily lives as much as, a Bitcoin and Ethereum would. Now, to get off the high horse and get a little more into the altcoins, this is exactly what I'm trying to hit home with you guys. Avalanche just got caught kind of through this whistleblower. Basically, the whole story here is that Avalanche was hiring a law firm to basically tell the SEC and the CFTC that, hey, you should look at these companies. You should look at Solana. You should look at this cryptocurrency project because they're doing illegal things. So they were hiring a law firm to basically weed out their competition and illegally damage the reputation of their competitors, which, back to it, a lot of these cryptocurrency projects, a lot of these altcoins, is that good for business in the long term? Is that really going to separate themselves in terms of actually being useful for the users and the people and the real world applications? No, not really. And again, we're in such an early phase in cryptocurrency that we have to remember that, we want more growth, we want more competition, but we don't want it in the wrong ways. So honestly, Avalanche is one of those projects where I was very bullish, and I think everyone was during the cryptocurrency bull run. But now that we're talking about it and we're kind of in this recession, it brings us back to reality, and it makes us ask the question, what cryptocurrency projects are actually long-term? Which ones actually hold value? Which ones are actually here to stay and make a change? And for me personally, the only two that I really see are Bitcoin and Ethereum. And Ethereum is still kind of in a weird phase. And let's actually talk about it, because here's the warning that I want to give you guys about Ethereum. Remember that the merge will be a scammer's heaven. One of the biggest cryptocurrency events ever is going to be exciting. It's going to be crazy. There's a lot of expectations holding around this. And you have to remember that this is also a scammer's heaven, because there's going to be a lot of new people. There's going to be a lot of questions. There's going to be a lot of fake emails, phishing. There's going to be a lot of changes going on. And so scammers are going to have a heyday in terms of getting information, getting people's Ethereum, faking people out with weird news about the merge and stuff like that. So a lot of money is going to be lost. And that's if the merge goes successfully. If the merge does not go successfully, there could be some pretty big problems. And here's kind of where I wrap it back with the Ethereum chart and why I think we could go even lower. Now, just in case you're wondering, the merge is obviously when they're changing from proof of work to proof of stake, and that's when they're integrating the beacon chain. And the main thing is that it's going to be more scalable and more sustainable. There's a lot of scrutiny behind, is it more secure? Because proof of work typically is more secure than proof of stake. But when we're talking about the date of the merge, they're saying the soft deadline is going to be around September 19th, so within a couple of weeks. And when we take a look at the charts, if we come over to Ethereum, one thing that I really want to point out is that if Ethereum fails, if the merge fails, if it doesn't do as well, if it doesn't meet the expectations of people, what are we going to see? Well, possibly what we could see is a fall below this floor, and maybe we fall below that, 1,900 level and we drop all the way to maybe 600, 500 levels. Is it possible? Of course it is, especially in these times. Now, if Ethereum merge fails in terms of expectations, in terms of scammers, in terms of bugs, then that could also mean that there's loss in trust in the entire cryptocurrency market, and this could be the catalyst to push Bitcoin below that 20K floor, possibly to 16, 17, again to my floor, 13K. So that's definitely one thing to consider. Keep in mind, it's a great time to hodl in the long term, but you also have to remember there is a huge catalyst event, the Ethereum merge, that could be a negative thing for cryptocurrency, because let's play it out. We're currently in a recession. We're currently in a bear market. Even if the merge goes well, what is Ethereum going to jump up 10, 20% in 24 hours or a week or whatever? Eventually it's going to come back down because that's just hype for right now. Long term, it's great, but short term, it's not going to change the markets. It's not going to change the charts. And if it fails or it doesn't meet expectations or it's mediocre, it's like when stocks have, it's a lose-lose situation. If their earnings come out and they do bad, the stock tanks. But during a recession, if earnings are good, the stock still tanks. So I think this is kind of a lose-lose situation. I think long-term it's great for Ethereum and cryptocurrency, but I think short-term on the charts, it's not really going to do much. So that's definitely one thing to keep in mind. That's definitely something I am holding on to on the side. I definitely want to have some cash ready just in case we do have a drop. I was really tempted to get into Ethereum before the merge, but now thinking about it, it's no different than trading news and hype. You want to wait until all this blows over, and more often than not, we're probably going to continue to drop in price. So that's everything I have for you guys in this video. If you guys enjoyed the breakdown, if you guys missed the technical analysis and all the videos, definitely leave a comment down below and let me know what you guys think about this style of video. Do you guys like it? What should I add? What should I take away? Am I rambling too much? Whatever. But I'll see you guys in the next video, and thank you for stopping by.